Markets hitting record highs. Let's get more from Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital Management. Diana, thanks very much for giving us the time. Your thesis here is it's hard to be too bearish when earnings are looking pretty strong still.
Absolutely. Thanks, Andrew, for having me. Nice to see you. Yes, earnings. Earnings are probably going to come in and end the year with a high single digits, which is great. And 2026 is expected to be the same. And yes, it's markets are powering through all kinds of worries. In a market where 50% of people think that we're going to come into a slowdown, and 50% think that we're going to power ahead on inflation. So there's a little bit of a mix between short-term and long-term, where rates are probably coming down as inflation pressures are not really pushing ahead, but a lot of people are expecting them to. So there's a lot of mix in the market as it relates to the macro, but earnings are holding up. And as long as that happens, it's hard to be bearish, and the economy is pretty okay footing.
But you note that we could, with this huge run-up in equities, we could have, for example, a 5% drop any time, and high flyers would be even more vulnerable.
Absolutely. So in the market that's up so much over the last few years, and the TSX also is making 52-week highs this year, and a lot of global markets are doing really well. From a global markets perspective, and Canada as well, this is probably a multi-year leg, but in this kind of rally of 5%, 5% is nothing. And so what becomes of utmost importance is the diversification of your portfolio. For us, that means holding the growthy companies, such as a couple of the high-flying techs, but we also have some golds in our portfolio just to keep the safety in the portfolio.
Yeah, speaking of which, let's get into some stocks you favor. Agnico is one you own, and of course that one's been hitting record highs over the past few weeks.
Yeah, so we still like holding some of the golds. We have a couple of names, Agnico, Kinross. And what you see in those two names, the theme is that we're looking for companies that do not have any kind of geographic risk, any kind of geopolitical risk. It's good enough to own the large, safely centered companies as they're powering ahead. Lots of interest in this sector, so we think that it continues.
The NVIDIA, that's one you're sticking with for now?
Yeah, so we talked about this, you and I, before the earnings, and you said, do we buy it right now? And I said, it might come down a little bit after the earnings. So earnings have been excellent, but the stock has been such a high flyer. It's come in a little bit. Momentum has waned in the market a little bit since the end of August, and now it's starting to pick up again. So names like NVIDIA and Broadcom and GE Vernova, all of these momentum stocks have stopped a little bit, and now in the last few days, I think that they're probably taking their next leg up.
You have a company we have talked a bit about, but it offers a window onto energy and the global transformation. GE Vernova. Remind us what they do and tell us why you like them.
Oh, well, so this plays on the electrification theme. It's a power company. They reported about a month ago excellent earnings. They grew backlog to 55 gigawatts. That's more than enough to power all of Canada. That's just their backlog. And their power segment order growth was up 44%. On the call, they highlighted their nuclear capabilities and opportunities, and you see what companies like Cameco are doing in the market. This is a strong theme. Relevant this morning, they announced they will sell a small industrial software segment to TPG for $600 million in cash. So this was expected, but a bit of a a sweetener. And if you look at the chart, you'll see it's been a darling, but it has come in a little bit, held support where it was supposed to, and now it's starting to move up again.
And what about the banks? Sorry, just give us your bank's strategy right now, Diana, because you say they did report great profit numbers.
Yeah, they really did. You look at all the banks actually in North America, almost 100% of the banks are above their technical levels, 50 to 200-day moving average, breaking out. Their earnings in aggregate have been excellent. We prefer Royal and BMO. You can't own them all, but financials have been a theme of ours throughout the year. They are doing buybacks and dividend growths, and the whole theme of their net interest margins are very supportive. They're just showing big revenue growth, and they're doing very well. Stability, which is, it's great to have a 52-week high market, but it's great to be able to not have to take undue risk in smaller speculative companies. You can just buy the drivers of the economy.
Thank you very much, Diana. Always great to hear from you. Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital Management.